Chapter 6, Financial Service Providers. We're looking at the second part of the chapter now on foreign currency exchange. So, like the services we talked about from banks and financial institutions in the last lesson, banks also offer a service to exchange currencies. So if you're going on holidays, you're going to abroad outside of the Eurozone, where they don't have the euro currency, all right? So if you're going to the UK, US, for instance, if you go into the bank with your euro money, they will exchange it then for that currency. Now they'll buy it at a different rate that they'll sell it at. They'll actually sell it at a higher rate than they'll buy it back. Okay, so you won't if you come back from holidays, you won't get as good value on your exchange rate. So just be aware of that. Okay, so some example here. To calculate it, for example, if you have €1, so this would be the way it'll be advertised, that they will sell it. If you, for every €1 that you have, you get 90 cent for, or 90p even, all right, for the pound. So if you have €100, you multiply it by 0.90 and you'll get £90 for your €100, all right? So you don't, obviously it's not worth as much. The pound is a lot stronger than the euro still. Okay, and say if you never spent that €90 and you came home to Ireland, back into the bank, and you want to convert it back to euro, you wouldn't actually get that €100 back, because as I said to you, that their buy rate won't be as favorable, okay, because they know that you have to convert it back, whereas here you're, I suppose, the one who's looking to exchange the currency, and you can shop around different banks and so on, so they will have to be competitive there. Excuse me. So just be aware, when you're converting, when you're going on holidays, you multiply. So think about going off somewhere, multiplying it by the rate. When you're coming back, then you'll divide by the exchange rate. Okay, so you divide the foreign currency. So in other words, the £90 divided by the rate that they quote, and you get your euro back. Okay. So other things to be aware of when it comes to banking, a lot has changed in banking. Like with most things in business, when it comes to technology, most things can now be done online. Okay, so you can do your online banking. I'm sure you might have seen that from your parents, to be able to do all those different transactions, being able to set up standing orders, direct debits, credit transfers, you know, to be able to check your balances and lodge money in, etc. All right, so that's what it's saying here. It'll allow customers to check their balances, view transactions. So it's real time. People are more in control of their finances rather than having to go to an ATM to check their balance. And as I said, they can transfer money between their accounts. Maybe they might have a joint account in the family and then their own personal account, or might send money to a friend or a family member, or even in business to other businesses. You can open a savings account on that, and again, you can lodge money in whenever you want and keep an eye on that. You can pay bills. Okay, so once you know the detail, you can set up a standing order. Okay, and that'll be every month paid. Remember, we're talking about insurance or any kind of standing charges. That'll be the same every month, rent or mortgages. You can apply for a loan, overdraft, credit cards. It can all be done online. If you forget your PIN number, you can get it changed. If you lose your checkbook or card, that you can get another one reissued in the post. Okay, so it's very handy. So using online budgeting tools will also help you to plan your income and expenditure. You can also top up your mobile phone credit, or somebody else's either, if you know their number. Okay, so many services available there. And now even they have apps and everything, so you could do it from your mobile phone. Okay, credit unions now are coming on board as well with their current accounts and doing a lot more like banks do. So they offer even, you know, ATM cards or debit cards as well. So you can also save and borrow from them. So they're becoming a lot more like commercial banks. Okay, and just to be aware, when you save money with the credit union, which I'm sure most of you have an account, you become a member. So it's a bit different. You're not a customer, you're a member, although you are a customer as such. But just to be aware that you become then a shareholder. Okay, so you can get dividends on your shares or your savings. And to be aware, not like commercial banks where they're in it to make a profit, banks are, credit unions are actually there not to make a profit. They're just there to provide a service for their members. Okay, so once the wages are paid, the money is invested back in and given out in dividends, invested to keep the credit union going, to give out loans, etc. An Post is becoming very much like commercial banks as well also. It used to be just a postal service to be able to pay bills, but you can do so much more now. You can do your foreign currency exchange, transfer money, do savings schemes, and now they even launched this year their own current account. So again, you can get a card and be able to do all those standing orders, direct debits like any current account. Just be aware that banks are regulated by the central bank. So you'll have an Irish central bank, but you also have a European central bank. So for any issues, you can contact them and they look into any problems. Okay, so what they do is they promote stability in the country's finances. So in other words, they make sure that the euro stays stable within the European Union, but also watch out for inflation, just stability in general. So they look at interest rates for banks on savings and also on loans. Okay, so they regulate, or regulate just means when it comes to rules and laws really, financial service providers to make sure that these commercial banks, post office and credit unions are doing what they're supposed to do, okay, and they stay legal. They solve any difficulties in credit institutions, okay, so maybe if they're going bust like they did a lot of banks during the recession and we had to bail them out. They protect consumers, okay, so again, when people have money saved, the banks go bust, that they make sure that people get their money and give advice also. So they're at the Central Bank of Ireland, okay, and they will issue currencies, the euro currency, to be distributed in Ireland to the banks. Okay, so the future of financial institutions, as I said, it's all technology based, all right, so apps, phones, even you can use your phone to tap now like you would a card once it's set up and you have you put it in on an app. But also on your Fitbit watch, for instance, or your Apple Watch, you can do the same, okay, once it's PIN protected. So the question is, what is the need for a physical bank? And if you look at your own banks around in town and your own local bank, you can see that a lot of it's gone to more technology rather than tellers and people face to face. So the future could be no physical banks. Okay. So they're saying here examples are British bank Barclays has plans for a wristband that will allow customers to make payments without using a direct debit or credit card. Okay, so their own wristbands, which would be handy. Smart watches, as said, is already there, such as Apple or your Fitbit, will be able to offer money advice while the wearer is shopping. Interesting. Okay, so that'd be good to see. So that's it. Have a look at the rest of the questions at the end of your chapter. So you have questions 1 to 3 done, so do the rest of them, and I'll put up the solutions and submit your answers, please. Thank you.